Welcome out to another Trading Justice podcast. We're going to talk the Trump trade. A lot of traders are out there excited, and for good reason. There were a lot of opportunities in the market. Those short-term oversold conditions Matt talked about from a technical perspective last week set up a nice little rally after the election. It was just all momentum after that. We're going to break down areas of the market that are setting up that might be good post-election candidates. We're going to talk about the Fed. They did meet this week. I know it doesn't feel like that because of the election. They did meet this week. Commodities had a very interesting back end of the week. We're going to break it all down. Matt, you had a lot of things to discuss in the newsletter this weekend, and welcome, brother. Good to be with you for an hour or so here. How you doing before we get going?
Doing good. Excited to be here with you to record another edition of the podcast. And we had an interesting week in the market. Bulls came out to party. There's no doubt about that. We're going to be breaking that all down. But just as way of promotion here, Chucky. Every single weekend on Friday we release the tackle trading reports. And there's two reports that our pro members get every single week to help them understand not only the backdrop of the market, what's happening from a technical perspective, sectors, commodities, obviously currency, everything about the market, right? We like to break down in the newsletter, but then you also get access to the Traders Report, which we put out every single Friday as well, that goes in conjunction with the Tackle Trading newsletter. And just let me, quickly promote these reports because we absolutely love them and our pro members love them. And if you want to get access to them, you can sign up for a free trial of Tackle Trading just by hitting the free trial link in the description below, or go to tackletrading.com and you can easily sign up for a free trial there as well. But in the Tackle Trading newsletter, it comes along with 3 videos to help you understand the visual aspect of the market from a technical perspective, sectors, as well as the global markets. But you also have 5 sections in the newsletter that we write about every single week. The first section is the technical update. The second section is the earnings or stocks in the news, major information that's coming out in the market on a week in, week out basis. I like to put my best earnings reports, worst earnings reports together, obviously prepare our community for what's coming up down the road, update them on the sector rankings, and give a little bit of analysis per sector, what we're looking at from a technical perspective. Obviously detail that in the video as well. As you can see, it's a very in-depth newsletter that allows you to understand exactly what's happening in the market on a week in, week out basis, exactly what the bias is, how you should approach the market from a trader's and an investor perspective. And then in the Traders Report, you get access to the best charts, best technical setups, active tradable setups every single week. And Mark, at the end of the day, we're educators, so we put the education in the application. And from an education perspective, we like to make sure you not only have a list, but you have the knowledge to be able to navigate not only the market, but as an active trader as well. And so,
I mean, the analogy that I always love is like, listen, we give you a fish, right? We're going to give you a fish, but we teach you how to fish, right? Like, we'll help you navigate, make some money in these market conditions, but set you up so you understand why you're making money, and you can repeat that process next week, next month, next year, 10 years from now. So
every single Friday afternoon, we release it for you guys to get ready for the next week in the market. And so if you're not a pro member, come join us at Tackle Trading, be a pro member. And if you are a pro member, get your homework done.
All right, let's talk Trump trade, right? So post-election, President Trump wins, not re-election because, he's sat 4 years out, but wins election again. Will serve 4 more years. The Republicans win the Senate. Looks like they're going to win the House of Representatives by a small majority. The red sweep, which a lot of people, JP Morgan, Goldman Sachs, Morgan Stanley, all pointed as potentially the most robust, bullish short-term scenario because of the fiscal policy that would accompany a red sweep, is in place from a thematic standpoint. And we saw a big move up. I don't want to start on the SPY. I want to come back to the SPY here in a second, man. I want to start with small caps. As we talk about potential areas that are thematically beneficiaries of the Trump trade. So, and I want to walk it through this 1-2 process. One, and identify areas that are potentially And then two, from a technical perspective, what are we looking for? Now, you used a phrase in the newsletter this weekend. I had to, while reading the newsletter, immediately message you to tell you how much I love the phrase. It was called organized defense, referring to small caps, right? Referring to things that had gapped up, specifically small caps, but as we're going to look at a couple other charts, certainly applies. And you get the big gap up post-election, and then the next day's 2 days price action, you use the phrase organized defense. I love this. I'll expand on it in a second. But what did you mean by that phrase and describe the technical situation that we're encountering with that phrase?
Well, I was trying to describe the how I viewed the consolidation following the gap out following Trump's victory on Tuesday night. And so on Tuesday night, we got a extremely clear election result, which I think was very important for the market itself. I'm not sure we would have had the consistency and the strength of the market this week without a very clear, decisive victory. And it certainly was that across the board. It was certainly that. And so you had a gap out on Wednesday. And everything in the market gapped. Not every sector, not every stock, not everything, but every index gapped out. Q's gapped, S&P gapped, Dow Jones gapped, IWM, small mid caps gapped. They all gapped up. And so you had a little bit of a similarity in the initial movement in the market. Small caps specifically are known to be extremely volatile, and they're very sensitive to any degree of change on the thematic perspective, any degree of change on the election, any degree of change on the economy, any degree of change on the fundamental side of the equation. They're ultra sensitive to those types of to that type of analysis. And so we had major news come out in the market this week, both from the Trump victory perspective, clean sweep out of the House, most likely out of the House. It does look to be trending. California's taking their sweet time to count all their votes. But at the end of the day, it does look like Republicans are going to have a clean sweep. They certainly will be, 53 in the Senate, probably 3, 4, 5 in the House. And obviously, Trump had a decisive victory himself. And so you got that gap up. But then in the S&P 500, you saw the continuation of the momentum. You just saw kind of that momentum continue up, 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 up. Very similar, consistent. I would describe it as consistent momentum. In the small to mid cap areas, the reason I described it that way is when you gap out like this, a lot of things can occur. You can see the continuation of momentum as you saw in the S&P 500, in the NASDAQ, in the Dow Jones. You saw just that continuation of momentum. But in the small caps, you really didn't. You saw the immediate development of a secondary pattern. And I think that's what I was trying to describe was in the S&P 500 and the NASDAQ, you have this ongoing momentum situation happening. Whereas in the small caps, you had that significant gap, which was larger and higher than what we saw in the S&P and the NASDAQ. And then it really kind of stuck the landing. And when you see a breakout like this, you're either going to see what we're seeing in the S&P, you're going to see a fading type price action, which we saw some of that in the commodity side of the equation, or you're going to see a consolidation high base. And the consolidation high base is a really good pattern to digest that momentum and give you that secondary pattern. I see it as defense because you're not giving up anything that.
Yeah, I mean, a lot of new traders
itself.
Yeah, a lot of new traders would say, how in the world could you describe what's going on as defense? But if you're around trading long enough, you've seen many gaps and they don't all hold.
Listen, not every gap holds. Not every gap holds. There's 5 degrees of gaps in the market, and only 2 of those gaps have a tendency to fill. There's a philosophy in the market that all gaps fill, and I would say that is a incorrect.
It is simplistic.
Yes, most gaps do fill. A vast majority of gaps fill, but not every gap fills, Mark. In fact, there's gaps that are down low on the S&P 500 that will never, ever,
They
ever,
will
ever.
never fill those gaps again.
And so momentum gaps, you really see them as breakaway gaps, exhaustion gaps, runaway gaps. Those are the three categorizations of gaps when it comes to how you gap out. And when you gap out of a sideways consolidation range, you have that as a breakaway gap. Breakaway gaps don't have a tendency to fill the gap. That would be an exhaustion gap. And so I saw it as defense because we did not start filling the gap, even though it started testing that on Wednesday itself. And so, yeah, Mark, I do see the market playing defense at the top of the channel because there are other scenarios. Go look at copper, for example. There are other scenarios where you don't consolidate in a very clean environment. And so heavens, yes, after a gap situation such as this, do I look at the short-term consolidation at the top end of that channel without giving an inch? Yes, I do see that as playing defense. Think about it like this, Mark. World War I, okay? World War I analogy time. World War I was basically trench warfare, right? So the French and the English and the Americans after 1917, they would push forward, not much, but they would push forward, and then they would just stop there, right?
Yep.
And you would defend the new trench. You would defend the new area. Well, that's what IWM did here. They led a charge, they gapped out of resistance, and now they're defending their new territory. That's the market playing defense at the top end of the zone, is they're defending the new support levels that will only kind of confirm once we get that pattern to develop. And so I just, it's a good question. I just wanted to define it a little bit because I'm fairly certain not everybody, even our pros that tackle trading, I'm certainly didn't understand specifically what I meant by that statement of IWM, but I hope that helped explain it.
It does. And for me, why it's so important is it not only sets up the next trade, which, right, like, as a trader, there are certain patterns you're looking for. There's certain characteristics of behavior on the chart, bullish control, organized defense, whatever you want to call this. It is a good sign for the next trade, but it oftentimes indicates that there is so much bullish love, sentiment, whatever, that it can serve as a foundation for not just the next trade, but for a couple patches of trade, serving as the base, as kind of serving as the new base moving forward.
Let me ask you a couple questions. Do you see this week that we just went through as a catalyst week?
I have it. I did a hard 14 and I combined my Cash Flow Vikings Trading Lab into one class, and I put it in the catalyst category. I put it in the Powell pivot, the 2016 election.
The market's been waiting on a catalyst for months and months and months. I certainly have it as a catalyst event. I absolutely.
This is absolutely define this as a catalyst event. And when you look at catalyst events, not only are you like picking up the aggression level on pattern developments that set up, which is why the development this week in these, in different areas of the market is so key for that next trade. But catalyst events oftentimes have multiple legs, right? You go back into the 2016 election, the first time Trump was elected. You had multiple legs, right? It set up, it played defense.
In that initial move, I want to say you had two legs, if I remember right.
And then after Powell pivoted in October, right? You had multiple legs. And then you get 2-3 months into it that now you're in deeper trend analysis and you shift analysis.
We get so caught up in the immediate move after a catalyst, right? And rightly so. But Mark, there were two short-term, really, really good momentum legs following the Trump victory in 2016. Both came out of secondary consolidation patterns.
Both came out of organized defense.
Yes, they did. Yes, they did. But let's not forget what happened in 2017 either. 2017, the year after Trump's first victory in his 100 days, was a very good year in the market. And that was based on tax cuts. And guess what? They're going to be one of the first policies that they have to really kind of tackle is the Trump tax cuts. They come to expiration in 2025. So they're going to have to extend that. So obviously that's going to be part of the conversation. I kind of feel like Groundhog Day here where, 2016, Trump's initial victory, you saw that gap up, organized defense, and then you had the tax plan coming into 17. You're going to have the tax plan coming into 25. It's a little bit rinse and repeat here. I'm not saying the market's going to behave exactly how the market behaved in, late 16 going in and all of 17, but the environment is favorable for that.
Yeah, but when you look at these catalyst events, like in the class I did for my trading labs, it was, looking at the Trump victory, looking at the Powell pivot in early 2019, looking at the Powell pivot late last year, right? Couple other events. We saw surges, organized defense, pattern development, right? If you see this, right, now I can put it in the catalyst event, you can put it in the catalyst event. If you see patterns start to do what they usually do in catalyst events, surge, organized defense, next level, guess what? The market's right there with you, treating this as such. And so, when we look at different areas, let's go over to XLF, another, widely regarded. We saw a similar, really robust price movement on XLF, right? Now, every one of these, like organized defense, control, going to have a little different flavor, right, to them on an individual candlestick. But are you looking at just the general behavior here when we break down different areas that could be potentially that next setup? If it quacks like a duck, if it looks like a duck, it's probably a duck, regardless of whether one candle's a little more red or not. How would you view that?
I think it's going to be interesting on seeing these patterns develop over the next few trading sessions, quite frankly, because when you do look at the sectors, obviously we had a little bit of a different price movement following this, right? And so I honestly think it's not going to be based on what one specific area of the market's doing, but I honestly think this is going to become a sector conversation, and a very important sector conversation. Finance was clearly a beneficiary off of the Trump victory, obviously running hot on that deregulation type argument. I think you're having a little bit of a very similar type pattern development that you're seeing in industrial. Both of those two areas of the market are performing fairly similar, I would say. And so when you're looking at IWM, when you're looking at XLF, when you're looking at XLI, the industrial, finance, and small caps, all of them had a very similar type of move because they're all running on that same policy of deregulation and the American First type, focus on rebuilding American manufacturing.
Robust fiscal growth, deregulation,
yes,
tax cuts,
So in industrial finance, small caps, that analysis
cyclicals
leads to the exact
cyclicals, right?
Yes. Not all cyclicals, but because basic materials and healthcare are a little bit different. But I would agree with, in general, the cyclical areas of the market are performing very similar to what we're seeing out of the small caps. Gap up, stabilization, gap up, organized defense, however you want to categorize it. But when you look at, say, the aggressive areas of the market, technology, you have a little bit of a different feel here because you're talking about a different development of a pattern. In technology, XLK, Qs are a little bit different. The gap up and the momentum you saw after, Wednesday and Thursday, you're really coming into overhead resistance. And so you could see a little bit of a different patterns develop here. You could see a high base, which would certainly clean it up. You could see a cup and handle. You could see a flag base. You could see a retracement. Like the pattern development in the technology area is going to, there's a wide choice there. Whereas when you're looking at IWM, XLF, XLI, it's high base and go, baby. That's kind of what you're seeing in there. That's why you like that development. When you're looking at communications right now, you're overextended in communications. You're a little bit more overextended in communications than you're in other areas of the market. It was a little bit better coming from a technical perspective coming into the events this week. It's our #1 rated sector at Tackle Trading. So in communications, I don't feel like chasing this type of movement in communications is warranted. You would definitely be waiting on some degree of secondary pattern. In fact, I feel like after a catalyst gap out event where we're all talking about momentum, the only conversation that is chiefly important to me is what are those secondary patterns? Everybody say it
Yes.
with me: secondary patterns, secondary patterns.
It is, Matt. It is so important because, for me, my personal trading, what I'm doing, I'm like total open mind. Now, am I on board with cyclicals outperforming? I am, right? It makes sense from a thematic standpoint. If I see the pattern, and this is key, I didn't have ARK on my bingo card for a massive, gigantic post-election move that didn't stop. That was not on my bingo.
So on your Trump trade currently, if I'm just kind of going down the list here, you got small caps,
small
right?
caps.
Just to kind of recap so far. So are these in order of priority?
No.
Okay, so you got small caps, you got XLF, cyclicals, XLI. We'll just call cyclicals there.
Energy, if oil performs,
you gotta put energy.
You have to put energy in there.
Energy. The interesting thing about energy, industrial, and finance, different trends, different patterns coming into the event, but they're now all running very similar post-event.
Yes.
And that's
and I love that.
Important.
I love that. And as long as
about damn time we get energy to perform with some degree of consistency.
And I love the consistency. I love how, once again, it is, industrials had a little bit better day on Friday. Finance had a little bit better day on Wednesday. I'm trying to back out of like micro analyzing any specific day and look at the general. Are they generally behaving the same, these cyclical? If they are, market's still on board. Materials, right? I thought they would perform better. They haven't. So I'm like, okay, market is going to be smarter than me on this one, right? I'm going to make it earn.
Well, I honestly, I think the market's right on materials, but I also don't think it's based on the Trump trade. I think it's based on they have not had a good earnings season, and a lot of material stocks have reported earnings over the last couple of weeks. So they just haven't had a good earnings season. In fact, out of every sector, the worst sector in this earnings season is basic materials on the natural beat rate. The beat rate in for example, Mark, the number one sector right now is communications, both from a technical perspective and a fundamental perspective. Communications had a 90% beat rate against EPS handles this quarter. Basic materials had a 52% beat rate against expectation, and the expectations were low bar expectations. And so taking into account that low bar, the fundamental environment for basic materials right now has not been great. Now, is there certain things in basic materials that you could lump into the Trump trade? I think you could lump in steel into the Trump trade. I'm not sure you can lump in silver and copper into the Trump trade because they're going to take on the Chinese component a little bit more.
It's
right?
more complex analysis.
Yes.
And we'll get to commodities here in a little bit, but yes,
So just to recap, you got cyclical sector, sans materials, you got small and mid caps, and you got ARK so far.
No, ARK is not on my list, and this is what I wanted to bring up. ARK is okay. So I had the cyclicals, and as I see pattern development, I'm going to hit them again. Right, you form sideways, you break out of those. I'm going to add exposure, right, and work it as the chart tells me to work it. Now, where I'm keeping an open mind is I figured, in this scenario, stocks as a general rule are going to benefit, right? And that I didn't have ARK being as one of the big outperformers, right? And this is where keeping an open mind on the pattern development, because the one thing I've learned is the market's smarter than me, right? I might be smart. I might put in my due diligence. Markets have a tendency. And so if I see that beautiful pattern development, right, that organized defense, those controlled pullbacks, right, the things you love as a trader, I'm going to be like, okay, consistency. Now, what I see in ARK at the end of the week is, I don't know, right? It's like I see a runaway. Could it develop into that almost immediately? Sure, right? I don't know, right? I'm going to keep an open mind. But tell me why I shouldn't love the small cap development more than the ARK, even though the ARK is overperforming right now.
I personally think you're seeing an oversized impact of Tesla on ARK here. I think you're getting a miss.
Largest holding in ARK is Tesla.
And by a mile, the largest holding is Tesla. And so I truly do believe you are accurate that ARK itself, innovation technology is ARK. that is not part of the Trump trade.
Mhm.
If you're talking small and mid caps as part of the Trump trade, if you're talking cyclical environments as part of the Trump trade, Mark, innovation technology does not run with those on the same gasoline. They don't run with those. Now, ARC and small and mid caps will run specifically on the lowering of interest rate. They will run together on a specifically lowering of interest rate.
That tends to be the better thematic driver.
Yes, but my point on ARC is, I think the momentum we're seeing here, which is significant. I just think you're really looking at Tesla here. I really do. I don't think you're looking at innovation technology. Tesla is certainly the linchpin and kingpin and end all be all of innovation technology, but they're a well-established company with a well-established leader of that company. That's not the case in innovation, disruptive innovation technology most of the time. And so I would say you're seeing an oversized price movement on Tesla. That's having an oversized impact on ARC. I do not believe that ARC is part of the Trump trade. I do believe that Tesla is.
Yes.
And for different reasons, though, and a lot of that is
and that was I was going to bring
Musk.
that up.
I think you're seeing a bet on Elon Musk here more than anything here.
Well, I mean, Elon Musk is going to be an integral part of some influential aspect, whether he takes on an official role. He's
not going to be part of the government because he's not going to divest, and he would have to divest to be part of the government. And so he's not going to do that, but he's going to have an extremely influential impact on policy, on a wide variety of policy. And so how does that impact him at SpaceX, Tesla, Neuralink?
It can't hurt.
Everything he does from a technology perspective. And so I just kind of, when I'm thinking about Musk and his influence and his companies, I've seen way too many of these situations to not think that Elon Musk is going to get a financial benefit from that influence. And I do think you're seeing that play a role here. Mark, we've already seen JD Vance come out literally yesterday and threaten European states that if they regulate not Tesla, but Elon Musk on the Twitter side of the equation, that they will pull out of NATO. That was just yesterday. And so, yeah, I do think you're seeing an oversight.
That's some swag and sway, that Elon Musk is going to have.
That's my point, is that was not going to be the case if Kamala Harris won on Tuesday. That is now the case. And so I just can't put ARC into that basket because I do think Tesla lives in that basket.
Yes. And this is the level of analysis right now post-election that you and I are doing, that Morgan Stanley and Goldman Sachs and JP Morgan, everyone's doing it because we got the burst of momentum, right?
The Trump trade isn't just one leg over the next momentum. The Trump trade is what areas in the market are going to be in a beneficial position based on policy and environment to do really, really good, not just over the next week, 2-3 weeks, but over the next, quite frankly, 6, 7, 8, 9 months.
Yeah, absolutely. Give me Bitcoin here. And then we're going to go back
with me that Tesla deserves to be in the basket.
Tesla in the basket,
but
right?
Not ARC.
But not ARC, and there will be separation from them, running on the same gas. But I'll keep an open mind, right? If I see organized, beautiful, controlled patterns on ARC, I'll hit them like I will anything giving the mark. But I got to see that before I get too excited. I am seeing the type of pattern development in energy, in small caps.
The number one thing ARC needs to fire off their patterns is lowered interest rates.
And that might not be coming. We'll get to that aspect of the Trump trade here in a second. Give me Bitcoin, though. This for me was, I think, the first trade I did post-election. I think the first trade I did was selling the one bearish position I had.
I
came in
that
pretty
took care of it for yourself on.
I was just like, all right, let me have that token.
And my head was like blown out of the water Wednesday morning.
Yeah, and I was like, and you read the climate. You're like, take what you can get. Let's play this. The second trade I did was on Bitcoin, and then I went through some cyclical lists and some other things to do that. We talk about that organized defense. We talk about that control. We saw that on Thursday. We saw that on Friday, following the big merge. move. Now Bitcoin is given a lot of flack for being a very high volatile instrument, and rightfully so, right? We see massive swings in Bitcoin. But when you go back and examine the times that Bitcoin was really humming, you saw beautiful patterns. It wasn't just this wild casino.
Anybody who has found Bitcoin in the past year, they don't understand the consistency that Bitcoin can do.
Yes.
When Bitcoin has a theme, Mark, you remember the theme of institutional adoption of Bitcoin?
Okay, we had a theme at the end of 2020. We had a theme with options with IBIT at the first year, right?
And in both of those scenarios, you had breakout out of neutrality and consistency play out. And yes, you absolutely got secondary patterns in that too. And so I think you absolutely have to have Bitcoin. After you get done with your list, I'll just kind of rapid fire.
Yeah, no, no. And this was the last, and I'm going to give you a couple specifics just in general, but like Bitcoin, like when it hums, you see this control, organized defense after surges, you see breakouts, and then things move very fast, right? So you got to be Johnny on the spot, but certainly has to be. And then, so like these broad things
what are your thoughts about just building a position here? Instead of the traders, the traders conversation, right? Traders conversations are all about momentum, technical analysis.
Yes, this is my general thing. The first few days and in the next little bit, it will be doing just that, being like, all right, I think these are good themes, right? How much, and then go through your general portfolio. Oh, I don't have a lot of exposure. I can afford to add here, right? And be wrong without it having a lot. And then when you see the secondary patterns, add layers of exposure to that, right? And so,
I think if you feel like Bitcoin's going to have a moment here, and we're certainly see a breakout on IBIT, you're seeing a breakout on the futures contract here, and that breakout is out of a long-term consolidation. This looks really, really good on the technical side. Now, on the fundamental side, I think you got to put crypto there at near the top of the list of the Trump trade. He was very aggressive on policy and
took a stand.
He absolutely took a stand. Absolutely, he did. And so you got to put Bitcoin there. But I don't want to, beat the horse here on Bitcoin. I want to add Ethereum to that conversation.
Yeah, I think crypto policy is going to be,
Yeah, and the difference for me on Ethereum versus Bitcoin, both of them are running very, very similar. And this is the thing that really interests me right now, Mark. Areas of the market that post-Trump victory running on the same gasoline, but coming from different positions on the chart. For example, I'll give you an example of that. You have one here on Bitcoin versus Ethereum. Over the last 3 trading sessions, what are we seeing? Big up, big up, big up, right? What are we seeing on Bitcoin? We're seeing, okay, so on Ethereum, big up, big up, big up. What are we seeing on Bitcoin? Big up, consolidation.
Yep.
Okay, now tell me which one has more momentum just based on that.
Yeah, well, Ethereum does.
It would be Ethereum, right? So Ethereum has a little bit more momentum, and the reason
coming from a different point of the chart,
from a different position. And you're playing what's called the old-fashioned catch-up game, right? You're playing a little bit of catch-up. And so I kind of, like, don't get me wrong, I love Bitcoin and the development here, especially on IBIT. When you look at IBIT, which is the BlackRock ETF, you're seeing a real good development of a high base here. But ETH, Mark, I don't think we should,
good call out,
like, not look at ETH that is having a really good breakout coming from a reversal. So you're talking about Bitcoin breaking out of an all-time high. You're talking about Ethereum coming from a reversal, both breaking out, both running on the same gasoline. I think you got to throw Ethereum into that conversation, at least in the short term, whereas Bitcoin's kind of that overall linchpin. I really like the positioning coming from Ethereum on their chart. Once again, the concept is very, very important. things after a catalyst event, all running on the same gasoline, which one's coming from a different position, which one has more upside potential, where's the reward to risk ratios. I think you can make a strong, compelling argument Ethereum has a better upside potential with a better reward to risk ratio than Bitcoin right now.
Yeah, two more thoughts out of me, and then you can add to it with my list. I create the list, so I get all the easy ones. So we'll see what you can add to it. Give me the U.S. dollar. Part of the Trump trade pre-election was a stronger U.S. dollar. We saw that move. We saw that on election day. Saw some give back on Fed day. Would like to point out, and I pointed this out in the newsletter, both on Thursday and Friday, you bounced to the penny off the rising 9, which is always a signal to me that there's not a lot of volatility on the downside.
Control. It looks like a lot of volatility, right? The chart has a lot.
Thursday looks like, oh, that's a big red candle. But when you bounce to the penny off the 9, that lets you know there's not a lot of volatility.
Who really controls the price action? That price algorithm does.
And this is going to carry over to our commodity analysis in a few minutes after we talk the Fed and go back to the S&P and so forth. I think
the most complicated version of analyzing the Trump trade is the dollar.
Is this because, obviously this can have an impact on commodities. And at a point, especially if yields come along, it can throw some wrenches in, specifically for certain areas, right? Like I might like industrial and small caps equally today on pattern development. If I see yields go to 4.8, I like industrials a lot more than I like small caps.
Yeah.
Right. And so
yields are going to play a role.
Charge. And then I'm just going to put out Geo. Now, on the individual stock level. So here, we're a few days after the election. We're on the weekend after the election. I'm not personally focused too much on individual micro plays this early. I'll see pattern development, right? They'll stand out. Yeah. There's a lot of craziness. And so I'm trying to look at things on the Trump trade from a sector area of the market perspective, because I got plenty to do. I had more trades the last few days.
I think it's very important to understand the Trump trade from a macro perspective before you digest the micro analyst of it. Yes.
So there are certainly things that's like, oh yes, prison REITs, they're going to do, yeah.
Oh, maybe, absolutely. Right? Private prisons are absolutely part of the Trump trade.
But I'm not worried about catching the micro. I'm going to catch a big bulk of the macro, broader.
The reality is on these specific ones, like private prisons, for example, Mark, they were up 30% on the day after Trump won. And so those things are going to be damn near impossible to catch. It's just impossible to catch. You got to wait on secondary patterns, even if it's, waiting on volatility reduction. Listen, you might have missed a trade this week based on all the momentum. You didn't miss a trend yet. And that's the importance here. Trends aren't one singular movement in price. Trends develop over time through a series of patterns. And in those secondary pattern conversations, they're extremely normal when it comes to trending analysis, because you only have 3 patterns in a trend. You have the breakout, you have overextended, and you have the retracement. The secondary pattern is what occurs when you get overextended. Geo here, or industrials, or material, not materials, but finance, or some of these immediate areas of the Trump trade, they got pretty overextended fairly aggressively fairly soon. And so secondary patterns are going to play a role. Geo here is a very, very good example of that. They also had earnings this week, by the way, too.
Anything to add?
When I'm thinking about the Trump trade, and I think in general, crypto cyclical kind of really, really stands out to that. I don't think, it pays to get into the individual stock conversation on the Trump trade yet. This is about defining the macro side of the Trump trade. And again, I want to be very clear on something in defining the Trump trade, as it's not just a matter of the next 2 to 3 weeks or even 2 to 3 months. It's really about what transpires going into next year and what areas of the market dominate in that first year under the Trump administration. And so when I'm thinking about the Trump trade, I'm thinking about, number one, I think about some of the policies he just would talk about over and over and over again. And I think you got to throw energy into that. I know we can easily say all cyclicals.
Yeah.
But I think I gotta put out energy even above finance or industrials for me right now. And the reason I say that is, once again, coming from a different position on the chart, but catalyst events have a tendency to realign algorithms and expectations. And so when I'm looking at energy here, gap out on Wednesday, consolidation, dialing in a secondary pattern. That's not
with the lowest valuation in the market on a sector level.
That's no different than what we're seeing in the immediate movement in industrials. That's no different than the immediate movement we're seeing in finance. That's no different than the immediate movement we're seeing in crypto. And so I like when we talk cyclical, yes, I agree with cyclical, but out of the cyclical, very similar to why I like Ethereum a little bit more than Bitcoin right now, is the exact same reason why I like energy a little bit more than industrials right now. It has nothing to do with Bitcoin being bad or industrials being bad. They're fantastic. They're part of the Trump trade too. But at the end of the day, coming from where you're coming from on the position on the chart impacts probability analysis. It impacts reward to risk. It impacts how you're going to see that trade. Is it a swing trade? Is it a position trade? Mark, I'm willing to bet that you're more comfortable holding a position trade on energy right now than even a swing trade on any area of the market right now. And so I would have to put energy there, energy up there. Crypto, obviously, based on the deregulation conversation, up there as well. I'm thinking outside of that, we're not going to see a lot on the commodity side until we see a little bit more time. But no, I think you had a good list. I would just say energy is top of mind on that cyclical side of the equation. Small caps, yeah, they're part of it as well. But no, I think you had a really good list. It's a couple spaces just to keep, and I'm looking at kind of my notes over here. I've been thinking about aerospace and defense out of the industrial sector, and I think that my immediate reaction was that was going to be a negative. I've kind of thought a little bit more long and hard about that one. I think that could
throw up ITA. Throw up ITA. That's a sector that tracks it.
I thought initially the gap out honestly underperformed what we saw in the gap out of everything else, but you had some good earnings reports and some good news coming out on Friday on ITA. If Trump invests heavily in a national defense system, a missile defense system, that would offset any alleviation of the Ukrainian or the Middle Eastern conflicts. And so obviously I'm just talking fundamental.
Yeah, no, it's worth right? It's worth keeping an open mind, right?
But initially I was like, oh no, aerospace is going to be negative under the Trump trade. Yeah, kind of gave that a little bit of a rethink there. I'm not sure it will be, but I think the two areas of the market that stand out above the other areas of the market for me would be crypto and the energy conversation.
Very, very cool. Very, very cool. In the midst of all of this, because, on Wednesday and Thursday and Friday, traders were doing this weekend. We'll continue to help our pro members walk through technical development. This is going to be a very exciting time from a trading perspective. As we see patterns develop, we can point them out to our community, and should be good, really good stretch. But Matt, in the middle of all this, Jay Powell and the Fed had an event on Thursday. Right, the least exciting rate cut event in the history of the Fed occurred on Thursday. Not only was it entirely priced in the fact that you would get a 25 basis point cut. It was like odds were like 99 point something %. Right, it was happening in the midst of all of this. I'm going to give you my quick take on Powell. So there was some anticipation on what Powell would say. Would he strike a more hawkish tone, right? You've had a couple small upticks in inflation, right? The things that didn't scare people, but started to make people keep an eye on those. We've seen CPI just come in a little bit hot, nothing to disrupt the disinflationary trend. And then on the announcement, they struck the language that said, basically saying that both inflation and labor were equally balanced. Some people are like, okay, what does this mean? I watched everything Jay Powell said. I reviewed all my notes. I watched it again. That was the same Jay Powell I have seen all year long. Optimistic cheerleader for the economy. Optimistic about the path of inflation. In fact, when he was asked about inflation, he said it's going to take more than one or two bad inflation reports for us to change our path right now. Basically saying we're not going to, we're pretty committed here.
Mm.
Generally, the cheerleader, the dovish tone, with some of the same, data dependent, got to be measured, that we've seen many times. It was the same Jay Powell I've seen on Thursday, I've seen all year long, right? Basically, did nothing to rock the boat. Right?
Oh, really? Told Trump you couldn't fire him.
Well, other than
That
that
rocked the
part,
boat.
which was interesting theater, on the
Oh,
individual
listen,
level.
honestly, I could care less what Powell said this week. I could care less what they did this week. They were not part of the conversation. I am here with popcorn ready for the Jay Powell Donald Trump fight going into 2025. I think that's going to be fascinating.
Yeah, because Trump does not want Jay Powell there. He's let his views on Jay Powell be very well known. Donald Trump wants more of
I don't know
a
why you wouldn't want Jay Powell there. Jay Powell will cower to Trump.
I know, but I think Donald Trump wants more of an insertion into the direct conversation. He wants a chairperson that
Oh,
will
you don't
take
think
his
he
phone
had
call.
an impact on Jay Powell lowering interest rates 0.75 in 2018? Like,
No, of course, I mean, Powell bent the knee at the end of the year.
and
We all know.
so and maybe I'm wrong on that. And Powell tried to state, I just laughed and laughed when I heard Powell be like, "No, I will not stand down." Whatever, Powell. Come on, whatever, dude. But I'm just here for that drama next year. I think it's going to be fascinating. Can you tell me the last president that had a direct conflict with the central bank?
Now it's like historically. No, you're more the historian on this one. Tell me.
JFK.
Oh, yeah. You've told me this story before.
I am not going to go into all the further detail of what I think of what occurred in that fiasco, but JFK was extremely concerned with the power of the central bank. He gave a couple very famous speeches on how they are, have too much control, too much power, and so on and so forth. But
and then he was killed in Dallas. Coincidence?
Listen, it's like I tell my girls, don't go against central bank.
There's very powerful individuals behind that central bank, that's for sure.
Listen, it has nothing to do with Jay Powell. It has nothing to do with Europe.
The Fed basically was a non-story, which was a beautiful thing.
We're not saying, hold on, that we are not claiming that.
No, we're absolutely. I absolutely threw that out there.
I am saying that they probably had a role.
Listen, all I know is it wasn't the lone shooter theory. Okay. That's dumb.
Trump, one of the things that I found fascinating in Trump's first presidency was he was going to release all the public the JFK files.
That's right, he was.
Until he saw them. And then he's like, I can't do it. I can't do it. I wonder.
Maybe one day we'll find out. But non-story. And so, now we do have, this is, once again, you might have missed that this is CPI inflationary week coming up, right? A lot of moving parts in the market.
Are we moving on from the Fed? Because I actually did have one actual thought. Sorry for the sarcasm.
I thought you were done when you started talking about Lee Harvey Oswald. I thought you were done.
No, I certainly was done. I certainly was done. There was one statement in the policy statement that I felt we should just talk about very quickly. And it's this one right here where you see the committee has gained greater confidence in inflation. All right. So the statement before this one read, the committee has gained greater confidence that inflation is moving sustainable toward 2% and judges that the risk to achieving its employment and inflation goals are roughly in balance. They removed the committee has gained greater confidence to now read the committee judges that the risk to achieving its employment and inflation goals are roughly in balance. That got a little bit of concern from people that maybe they're a little bit more concerned now with inflation. That's not how I personally read that. Oftentimes, when it comes to these micro changes in the policy statement, and every change is very, very important, believe me, they spend millions of dollars on very smart people, at least hypothetically smart people, to evaluate these changes, which are very, very few. But at the end of the day, oftentimes, once the market has accepted a language, they remove that language from the policy. statement.
That makes sense.
And so, in my estimation, the committee did not change the way they see inflation. They just don't have to say we have greater confidence, because they've been saying we've had greater confidence for months on the dual mandate, to now read that we are now, we're roughly in balance. I just see them removing some of the language. I don't see it impacting how the Fed sees the policy and the environment in general. I just wanted to bring that up, because I do know that there was a little bit of a talk on if the Fed was a little bit more concerned on inflation. They certainly could be, but it's not based on that statement.
Not the Jay Powell I watched on Thursday. He didn't give two craps. In fact, he said
he was dovish. He
said it's going to take, like, you're going to have a bad CPI report. It's not going to change anything. Well, we're going to get a chance on Wednesday to see if we do get a bad CPI report. Jay Powell basically saying, if we do, nothing to rock the boat. Nothing to rock the boat, because it's not going to alter our thinking. But obviously, inflation has taken a little bit larger role in recent months.
Just not alter your thinking when you're data dependent. I get it. We're not having a massive inflationary conversation right now, but Mark, it wasn't like the inflationary report from last month was
like
good.
I said, it was the same Jay Powell. It was the same Jay Powell was seen for a while, right? Just total cheerleader. But like, if anything is going to rock the boat in the coming months, it will be yields and the dollar, right? I think that's pretty easy. Like, that's not a unique take right now. I think
if yields and the dollar don't slow down, this party people are having in the market isn't going to last.
It's just not going to last, and that's why
you can't last against that constant headwind called yields.
And particular, it just can't. We've seen that in history too many times, right? Markets doing great, markets ignoring yields, ignoring the dollar, and then one day it's the only thing that matters in the whole universe to the market, right?
Well, so that's why understanding volatility pockets are important. That's what we talked about all last week, played out. Now we're getting ready for the Trump trade, or Trump trade 2.0 here. Yeah.
So we'll pay attention to that. We'll break that down in the Tackle Today video on Wednesday morning. Be sure to check that out. Let's get to stocks in the news. Let's fire through 5 stocks real quick before we finish off our podcast talking commodities.
Okay.
I already talked crypto. Give me JP Morgan, right? And this was like
is this your top 5? Are we doing
this? This is my top 5. And every week I bring 5 stocks. They're not the most important 5 stories of the week. There's just 5 stocks that just caught my interest. And I know on Wednesday morning, I had a list on my screen of like, okay, and on JP Morgan stood out the most Wednesday morning, because it's not every day you see a 10% gap up on a company in cyclicals, not involved earnings, like something like JP Morgan. And it was massive, huge, just giant run. Now, not surprised, because it was so elevated to give out. But what's really interesting to me about JP Morgan, it's if it walks like a duck, if it quacks like a duck type analysis of the patterns that gapped, right? Like, you're going to have different flavors from industrials to finance, and on individual stocks, you're going to have different flavors, especially if the move was super, super big. And so as long as I see control, right, it's going to look a little bit different to your visual eyes. But am I seeing the same thing that I'm seeing in these controlled areas, right? So far so good on it. What's your thought on
every pattern's going to be a little bit different?
It's just going to have some nuances to it.
I mean, it just is momentum patterns on earnings, and I do think you could look at this gap situation on JP Morgan as a very similar to an earnings gap on a positive type catalyst coming out of earnings, but. The second candle was an inside candle. The third candle was an inside candle. You would treat it like a flag off the top of the price action, which means your entry would be based on some degree of day trading entry, with the stop loss as a day trading stop loss, whereas you're looking to hold it through a little bit of an as a swing trade, for example. So on JP Morgan, you would just be breaking it down. Where's that intraday level of resistance that I need to clip up above and whatnot. So yeah, it's just a different pattern. High base is a little bit different. Inside candle flag is a little bit different. Gap fill is a little bit different. Everything's a little bit different. And if you struggle with those technical conversations, Listen, one thing we love teaching people how to do at Tackle Trading is the technical side of the equation. So come over, become a pro member, sign up for Master Trader. It's not this coming Monday, but a week from Monday. And so it's about in 8 days from now. And yeah, check it out. But outside of that, I don't have anything else to add on JP Morgan. They're just the leader in finance, and they didn't have any other news this week.
Palantir, my second one. I did this because I like you, and I know you love this company. CEO is one of,
I was going to call you crazy.
the CEO is one of our favorite human beings that happens to reside as a chief executive officer in the market. Really big fan, both of us. Break down their earnings for us, Matt.
Well, I'm not going to break down their
Well,
earnings,
yeah, you know what I mean, though.
but in terms of the earnings itself, they did report earnings here this week. Pulled off the hat trick, 10% beat against EPS. Revenue was a good handle. The increased forward-looking guidance as well. Mark, this is one of my favorite stocks in the market, and I don't think we're even remotely close to being done with this conversation. This is a top 10 AI stock in the market. This is one of the leaders from a growth perspective in the market. I love their CEO, and they had a fantastic earnings report where they pulled off the hat trick this week on Palantir. I think the moon is the target here on Palantir. I don't see this thing slowing down anytime soon.
Another sentimental favorite of ours, Elf Beauty. Different point in the chart. This is a company that we've cheerleaded for many times over the years. Got caught up. One thing to know about discretionary oriented companies, a lot of discretionary stocks had a rough go of it for a while. Now the discretionary sector is a good spot. And I'm in a real big mood to chase some laggards in discretionary, right? Like especially good quality companies that coming off a positive catalyst. This one smells like a Monday morning type credit play for me.
Yeah, when you're looking at Palantir, like that's a trader stock at this point that you would just have to attach your momentum to right now. When you're looking at ELF, you got something developing at the low point on the chart, a real clean reversal here. Obviously, it really does stand out from a technical perspective. Now, looking at ELF here from a fundamental perspective, who had a pretty good earnings report, Mark, in my estimation, they had a better earnings report than Palantir, and I just raved about Palantir. When you're talking about ELF here, one of the better reports this week, I would say 50% beat against EPS expectations, 40% year-over-year revenue increase, and the increased forward-looking guidance by 3%. Those are not numbers that you should scoff at. Those are extremely compelling numbers coming out of the fundamental side with earnings. Technically here, you're going through a double bottom, double top reversal, looking pretty good coming from the low point on the chart. You look at it on a weekly chart here. A lot of times you want to do that. Got a nice little pocket to play there. So yeah, totally understand ELF being on that top 5 list. They probably would be number 1 for me out of.
This is not in any particular order. This thing, I'll be selling puts to buy out of the money calls on this one to help fund those. I really like.
We call that the broke boy trade, by the way.
And so
sell a put option to finance your aggressive gambling addiction called long calls.
I do not buy long out of the money calls hardly ever, but this is one of those. If I look out to June,
you see it as a deeper value type situation.
Yeah, this one stands out. This one stands out for me.
It stands out to me too.
The next one stands out for me as well. Southwest Airlines, give me love. One of the things that while we're making all of these, what areas of the market, this and that, when I see quality companies at what I deem to be a fair price, give me a good technical pattern with room to run, especially when I look at weekly and monthly charts and see that maybe there's been some holding down, suppression of moving averages that we're now clearing. Well, I'm going to get excited on this. And so, it's one of those things that like macro, pay attention to the big one. But when I see quality companies at a fair price, give me technical signals, I'm in, and I'm not in for a trade. I'm in for a position. That's where I'm at with love to start this coming week.
Well, I think that's one of the greatest skill sets to kind of learn is, are you looking at a swing trade environment or are you looking at a position trader environment? Position trader environment typically has a little bit more multiple time frame feel to it, typically based on a little bit of more, catch up type of philosophy. Typically, you're talking very clean breakouts with open air. Coming from a lower position on the chart. And I think Southwest fits out all of that. I mean, you're talking about the combination trend line on the weekly chart coming into a horizontal resistance level. You obviously have an open air environment. Anything above 32 makes sense to me on Southwest.
In the industrial sector, which we've highlighted a few times in this. Last one is Match.com. It is a public service reminder that you might have bullish conditions. You might have wonderful bullish conditions. Don't ignore earnings. Don't ignore macro catalysts. Not every stock's going to be a winner. Match.com, sentimental favor of mine. I still like it long term. But just a good reminder that, rising tide can lift most boats. Not every love boat's going to make it on that tide. Just a reminder, play strength in these markets. They
actually had a beat on EPS. They beat on the revenue side of the equation, which means if you're ever dealing with a gap down situation against the entire marketplace partying like it's 1999 right now, that's a guidance problem. And Match certainly had a guidance problem. They did officially lower guidance on the revenue side by about 10%. Listen, if you're going to lower guidance by 10%, you're going to go down 20%. And that's exactly what Match did.
Yeah. So let's get to commodities. So we talked about the dollar Trump trade. The interesting thing in the commodity complex was the correlation this week between the dollar on Wednesday, Thursday, Friday, and commodity prices on Wednesday, Thursday, and Friday. Now, there's some Chinese news in there. We'll talk about that specifically when we get to copper. But we saw the dollar up, commodities down on Wednesday, the dollar down, commodities up, the dollar up, commodities down. There was just like the correlation is usually not that specific every day, but that certainly was at the end of the week, Matt. But when we look at some of these charts,
I would say it hasn't been correlated for the better part of the year.
Yeah, it is going to be interesting to see how long that lasts. But when we look at some of these, and you're going to see this similar pattern, down on Wednesday, up on Thursday, down on Friday, gold is going to look the cleanest out of all of them. Not a surprise. Well,
it also came from the best position as any of them did as well. Silver already had volatility. Copper had recently broken out, and copper was on the radar because of that breakout. That breakout was clean, but after the Trump clean sweep, I mean, that was some real volatility on the copper side of the equation. So the Wednesday price action on gold, copper, silver were all extremely similar. And they all took upon that dollar type move. Dollar was big up, everything was big down. Dollar was big down, everything was big up. Dollar was up, everything was back down. The last three trading sessions, the commodities and specifically the precious metals and the industrial metals have traded extremely close to the divergence of the dollar that we typically grow to know and love when it comes to gold analysis. That doesn't always play the case in silver and copper, Mark. It plays very, very, very close in gold, but in the industrial metals, those are typically going to go at Chinese analysis and copper specifically. And obviously, like anybody that has been alive in the last year knows Trump is targeting China from a tariff perspective. And so that had an immediate impact to the downside. The following day, China came out and said, hey, listen, we got bazookas, and bazookas meaning fiscal stimulus bazookas, and we're willing to go aggressive on the stimulus. Commodities responded right back up. And then on Friday, you had a profit taking session off that candle. I think it's extremely complicated analysis right now.
Yes, it is right now. And that is going to be my general take as well. Is like, listen, we walk through an hour in this podcast, right? Like, controlled patterns,
so many cleaner environments.
Like, right? and so this is one of the areas, Matt, like in commodities, and that I'm scaling back a little. Certain, I always got positions, right? Managing those positions, but until it becomes easier, I got areas in the markets that are just easier right now.
Easier, cleaner with better themes. Why fight the volatility? And that's what you have in the commodity space, and it's due to the dollar. That will slow down, there's no doubt. And when it does, Mark, when that volatility declines, we'll be able to see it on the chart. We'll be talking about it
3 days from now, could be a week from now, could be a month. We don't know. But when it does,
what we do know is we have volatility. That's what we do know. Mm-hmm. And you don't want to fight that on the commodity side of the equation. When you look at gold here, hovering around that 50-period moving average. I don't have a negative take on gold.
No.
Like, that's not what I'm suggesting. I like gold is still, I think, positive 15 for us at tackle trading, despite the volatility. And so, like, I have a positive opinion of gold. I personally think the 50-period moving average holds on gold. And I actually do believe that gold mining stocks, with a little bit of, not a lot of development, but with a little bit of development, it can go a really long way. I think we got a little bit of an overreaction on the gold stock, specifically due to what transpired on the dollar this week. I think we were talking about basic materials being the worst part of the earnings landscape, and they have the worst beat percentage out there, no doubt about that. I don't have a negative take on the gold stocks themselves. A lot of them did miss on the EPS side, but a lot of them had revenue up year over year, 25, 30, 35% year over year revenues going up. The fundamental valuations of these companies are a little bit lower now. And so, they're not in a tradable situation yet because they're underneath all the shorter duration moving averages. But Mark, a little bit of development here will go a very, very long way in those gold stocks. So, commodities themselves are on fire right now, meaning running like their pants are on fire. Not the momentum fire we like to see every now and then. But I'm not sure we see that continue longer term. I think we just see the volatility play out. I actually think it's an overshoot to the downside on the gold stocks. I see that as an opportunity. I just think anytime you've given up these shorter duration moving averages, at tackle trading, we preach patience in development. We preach patience in development of the patterns you need to see, because if you don't have a pattern, you don't have probability. And if you don't have probability, you don't have a trade. Period. End of sentence. If you cannot determine the probable outcome of something, it doesn't matter what the reward to risk ratio is, because in trading, you need an edge. And right now, you don't have that edge on the commodity side. And so what do you need to see? You need to see 38 hold. That's the 20-period weekly moving average on the gold stocks. And you need to see a little bit of consolidation, which will bring down those shorter duration moving averages. And once again, if that seems a little bit overwhelming, I promise you it's not. It's not. You just have not sat your butt in that chair called Master Trader and learned how to do this the right way. So I invite you over to come to a class that we are teaching in a week and a half from now on, let me get the exact date. We don't have the landing page, or I'd have it up for you guys. On the 18th and 19th of November, we are teaching the next edition of Master Trader. And in that class, free to our pro members, you will learn how to do what I just talk about, or what we talk about every single week in this podcast on the technical side of the equation. So how do you get access to that? You email us at team@tackletrading, or you sign up for a free trial at tackletrading.com, and you let us know that you want to attend Master Trader, and we'll get you enrolled.
Yeah. So just fire through silver, copper real quick. All of your analysis is going to play for them. Very sloppy, very messy. Just need time. Just need time.
Listen,
development.
Support violated, volatility ensued. How many times have I given the dam breaking analogy? Yep. The dam broke on the commodity side of the equation. Volatility poured out, and we do not know the probable edge in anything related to the commodity side of the equation until we see the volatility reduction and we see pattern development.
Give me oil. We're going to finish on oil. I actually really like oil from cash flow perspective, both on a bullish and a bearish perspective. I started doing at the end of the week bearish and bullish cash flow. I like the support build. When you put this on a weekly chart, that's a legitimate support build at around 67, right? You've traded there for multiple weeks now. It's been a while. Those tend to end up working out pretty well.
65 to 68 has been a long-term, vitally important support level.
So as long as that holds, I like the bullish side. I got a million moving averages and areas of resistance on the bearish side. I'm actually like it's just one of those. All right,
You have a
like,
positive economic theme, but also a drill baby drill theme
yeah,
that
like
will
I
cap
just
it
like
out.
really
Which,
like
listen,
I
if
like
I
cash.
if I did iron condors on futures, I would do one
Like
on crude oil.
yeah,
It
no,
makes
I mean it's
sense.
just one of those situations where until I see or support a resistance level break. And the one thing I know about commodities, you can trade in sideways patterns a lot longer than you would think, right? Like a lot longer. So till I see one of those
Crude oil
breaks,
has been in some degree of consolidation pattern between 65 and 80 for months.
yeah. So I'm enjoying that on crude oil. Don't have a bigger take than that. Just
I don't have a big take on crude
yeah,
oil.
just something fun I'm doing on the side
If
while
you're
I'm
looking at the direction aside, I would strongly recommend energy over crude oil personally.
Oh, I'm long. I'm not doing that on energy. Like on
Yeah,
oil, I'm doing on energy. I'm just going long
yeah,
on the.
that's like if all I'm saying is if you're looking for growth, you're going to get growth in revenue out of the energy components, regardless if crude oil goes up or down. Mark, in the last 4 years during the Biden presidency, energy and notwithstanding the pandemic recovery, because that year and a half was obviously unique, but energy stocks would take on the crude oil conversation, similar to gold stocks taking on the gold conversation. If we're going to embrace a deregulation drill baby drill environment,
It's a
I'm sorry,
huge difference.
that's a
It's a huge.
huge difference.
Oil can do nothing. Energy
Oil
stocks
can
can go up twenty
stabilize and
percent.
energy's revenues can go up very healthy. And so, plus you're dealing with the cheapest valuation in the market. Have we
Yeah,
said that a couple different times? We have not spoken about energy in this podcast for months and months and months. There's a reason for that. I think we got to start waking up to energy because again, they're running on the same gasoline as the other cyclical components.
all right, super fun podcast. I really
I
enjoyed it.
enjoyed it as well.
Like, listen, check us out on Tackle Today. Every day we put out a video for everyone to see, breaking down some of the key concepts from that day. We carry those over to the trading lounge and have much more extensive conversation. Our community is a fantastic one. To be part of that community, just go sign up for that 15-day free trial, see what we're all about. But man, give us some final thoughts. Send us out.
Yeah, at tackletrading.com, sign up for that free trial membership. You can test out everything we love to do with our pro members, including the Tackle Trading newsletter, the Traders Report, which are our 2 core reports we put out every single week for our pro member community. And then on a day in, day out basis, we sit down in the Traders Lounge with our community every single day and we break down the market every single day. We break down trades every single day. And at the end of the lounge, which typically takes right around an hour and 20 minutes every single day, at the end of the lounge, and when I mean the end of it, I mean the last 45 minutes, which is about half the lounge, we call this team time. And in team time, you can ask us anything. You can ask us a trading question, an educational question, a position size question, a trade management. Just last Thursday, we talked about, we broke down 2 different covered call, how to manage a covered call. We broke down multiple different short-term trades. We talked about trailing stop losses on other trades, married puts on other trades. And these were questions coming into us coaches from our community, because that's what Tackle Train does. It's not just about the education. It's not just about the application. It's about the support you get from those coaches day in, day out. And if you want to be a part of a community that will do that for you as well, come over to tackletrain.com, sign up for a free 15-day trial, and become part of the most amazing, helpful trading community in America today. And with that said, I hope everybody has a wonderful, wonderful rest of your week.
Have a great week, everyone.